High income and steady payouts, but is there a catch? This is Inside ETFs, and we're talking about option funds. Yield-hungry investors are turning to option-based ETFs. These funds promise income even when markets fall and are attracting billions in new money. BlackRock expects this new breed of portfolio management to triple by 2030. Income is normally associated with safety, but critics aren't so sure. And as these funds go mainstream, do investors really understand what they're getting into? Let's ask Will Rhind, founder and CEO of GraniteShares. So, Will, it's risky enough to go into single volatile stocks. Are you adding additional layers of danger?
Well, I think, in terms of investors looking for income, that, individual stock investing may indeed be risky. But of course, there's a risk reward trade when it comes to generating income. So this is an extension of the idea that people have been using for decades, which is buying individual bonds or buying stocks which generate dividends. And in this case, in particular, with funds that may have a single underlying that generate income from options, we're just talking about a way to generate a lot higher yield or a lot higher levels of income than before.
But those call options may limit gains when underlying stocks rally strongly. Are you missing out on the real upside potential?
Yeah, no, absolutely. I mean, this is just to be clear. I mean, the trade-off here is that you're effectively creating an income machine by selling an option. In other words, selling a lot, if not all of the upside in return for income today. So this is very different in terms of the need for income versus the need for growth. If you're looking for long-term growth, then options-based funds such as covered calls or put writing strategies are not the things for generating growth. This is for generating income. If you're looking for growth, that's a separate investment category.
Overall, though, you can't assume that the huge reported yields on option ETFs will last. How are you reassuring investors?
Now, there's no guarantee, of course, that if we're talking about a yield that on an annualized basis is 150%, that it will always be 150%. Because clearly those yields are determined by the volatility of the underlying, the volatility in the market, and that volatility will rise and fall according to market conditions. However, I think it's fair to say that the yields will always be higher than an unleveraged equivalent because of the fact that you're using a leveraged underlying.
Do you agree with BlackRock? Will investors keep flooding the space?
Look, this is a massive category. And first and foremost, I 100% agree with what they're saying. And again, people just need to understand that the investors that are buying these products are just looking for weekly income. It's as simple as that. That is different to investors that are looking for long-term capital growth. And what we've seen is once upon a time, an investor may not have had the choice that they do today and may have bought, say, a mutual fund which promised them growth and income. Actually, what they got was not much growth and not much income. And so today, the investor today has access to high precision tools such as yield boost products, such as high growth ETFs, etc. And they're constructing precise portfolios that give them, if it's growth, high growth, whether it's stocks or ETFs, and if it's income, high income by way of either options or other types of income generating investments. So that's the beauty of the world we are today, that people can choose these precision tools to give them the exact investment outcome they're looking for.
So finally, Will, many of these ETFs are tied to such volatile stocks as Coinbase and Nvidia. Does that limit an investor's options?
Well, again, it depends on what you're looking for. The more volatile the stock, the higher the yield typically. So if you're looking for the maximum amount of yield that you can generate, then you're looking at underlyings almost certainly every time. Just to give you an example, if you take a yield boost ETF offered by GraniteShares on, say, the underlying NASDAQ 100, that would be our TQQY ETF. You're talking about an annualized yield of around 50%. Now, 50% sounds huge, but it's not that high in the realm of what some of these options-based ETFs can do. And like you said, if you have a single underlying, like Nvidia or Tesla or Bitcoin, you could be talking yields of around 150%. So there's a big difference. And therefore, it depends again on what your investment objective is. But for those seeking the highest yields, they're gravitating to the underlyings, which are the most volatile, which almost certainly are going to be individual stocks or things like Bitcoin.
That was Rhind from GraniteShares. Don't forget, you can watch more videos on Reuters.com.